The news, of course, is about what Bernanke did and what he said and what he didn't say, but the markets in general seem to be saying that what he said was positive for the rand. So we've got the rand on the stronger footing here as we begin the week. Did he get it wrong, or was he right?
Well, indeed, we did see that the rand enjoyed some short covering into the weekend, and risky assets also gained some ground on the back of the fact that there was some belief that Bernanke was still keeping hopes alive that monetary stimulus will be forthcoming in the coming months. He did refrain from saying that there will be some quantitative easing, which did lead to some risk aversion initially, but he also reminded participants that there was the Fed had tools at their disposal to inject stimulus over the coming months, and that really saw equity markets recover and risky assets as well. So, but the dollar did weaken across the board. We do believe that we could see the rand possibly strengthen this morning, but we do see that the 7 rand 6 to the dollar is possibly a very tough hurdle to crack, and if it is reached to the downside, we could possibly see a move towards 6.96 in the short term, which is likely to be which is quite plausible at this point.
So what's your range for the week?
The range for the week, I would imagine, would be about 6.96 to about 7.30, given the current conditions that we are seeing and the fact that we are still expected to see quite a bit of data coming out of the South African economy. Yeah. There's GDP data, manufacturing data as well. So there's quite a bit of news that could temper the currency either way.
Yeah. Now we're going to see that proof, of course, coming up tomorrow on the GDP numbers. But what we've also seen in the interim and in the lead up to those numbers coming out is a lot of revisions for some of the banks for their growth forecast. What's Standard Bank's stance? Are you guys changing your view on where the economy is going to this year?
Oh, well, we believe that the data coming out tomorrow is expected to come in at about 1.6% quarter-on-quarter, and this is from 4.8% quarter-on-quarter in the first quarter. And obviously, if these numbers do prove or rather materialize, it could put some downward pressure on our numbers. We have penciled in a growth forecast of about 3.8% for this year, and indeed, if we do see that 1.6% come through and a softer second half of the year, we could see those numbers really come down quite a bit.
And on the currency, are you changing your view on where the rand will be at the end of the year? What's your forecast?
Our forecast is for a mild depreciation in the currency towards the end of this year. We have seen some strength come through, but over the past couple of days, we did see the weakness come through, and we do believe by the end of this year we could see that weakness continue.
Yeah. Now, we're seeing the FRA market pricing in half a chance that we're going to see a rate cut next year, given what some people are calling a soft patch in the economy. Where are you guys standing at? Do you see that rate cut coming, or is it just the market trying to widen the band so they make a bit of money on the margin?
I think it's the latter. We do believe that the Reserve Bank will probably keep interest rates on hold for this year and into next year. We only see an interest rate change in the third quarter of next year, but we don't see a cut at this point. However, if conditions do deteriorate further, if growth conditions do deteriorate further, the Reserve Bank has indicated that they will probably adjust accordingly, and we could possibly see that rate cut come through. But for the moment, Standard Bank's house view is for an interest rate hike in the third quarter of next year.
Now cut from Standard Bank. There's a lot of other numbers that are coming through later on this week. We've got the credit numbers coming up. We also have the balance of payments. We've got PMI data. We've got vehicle sales before the week is out. Any of those numbers that you see having the potential to move the markets, and in what direction?
Indeed, we are expected to see the PMI number come in slightly stronger than what we did see in the July data, but we also have to bear in mind that the July data was affected by the strike activity in the manufacturing sector, so it really did put some pressure on the numbers for July. We could see that number come in slightly higher for August, but it's still expected to remain below the 50 benchmark level, which really distinguishes between expansion and contraction. The employment sub-component of that index is a bit worrying because it has remained below the 50 level for quite some time, and it really is an indication of softness in the manufacturing sector going into the second half of the year. The credit numbers are also expected to come in slightly softer for July, and that's really on the back of the fact that we're not seeing growth in the mortgage advances and leasing finance and installment sales as well. So there is some concern that credit extension to both corporates and households is expected to slow in the second half of this year.